Good morning, folks, and welcome to a brand new episode of FINMET Mondays. Here we are after $100 run up and then a correction on Friday. It seems like it's not gold anymore. We're trading cryptocurrencies, mate. I think you'd agree with me. Markets have been too
In
volatile
fact,
for a
Bitcoin also, even
yes.
Bitcoin has corrected 10% over the last couple of days. So you're right. It's like crypto now.
Any thoughts made on this run up that we
Yeah.
saw on Friday and what kind of probably triggered the correction back to 2330, 2340 levels?
Yeah, I think it's driven, like you said in a previous podcast, 2300 was a very strong resistance level. There were multiple tops at that level. So the trend of 2300 was very important. And once we broke 2300, basically it was a one-sided market. There was no sellers, it was just buying, right? And so that's why we saw this huge run up on during the week, up to 2440, 2430, something like that. And I think coming into the weekend, people were worried because of the uncertainty, Middle East, etc. And so they said, okay, let's just book profits and take it easy. And so we saw all the way down to 2320. And of course, now the events of this weekend are happening right now. But from a technical point of view, maybe you can tell us what lies ahead.
Currently, what we are seeing right now is a 1 hour chart of US spot gold. The formation that we see from a technical standpoint is of a classic head and shoulders pattern, is what I see from. You can see that there was one shoulder being formed here. You saw an immediate retracement. Then you saw a head being formed over here. You see a retracement. Now we are coming back to this point right here, around the 2335. And my guess for the next week is that this 2320 is going to act as a bedrock of support for another swing back up against this region over here, which is 2360 to 2380. This is going to be the possible trajectory of how traders would be looking at it. The second reason we also see that there could be a strong zone of support over here is because if we check the Fibonacci retracement line on a daily level, and maybe I can just switch into that, you will see that when I draw a Fibonacci retracement line from this point over here, which is the low, to all the way the highs over here, the 61.8% zone, yeah, or the Fibonacci retracement is somewhere around this 2322, which is not very far away from where we are currently. I know this drawing is very condensed, but this is exactly where we are. We are somewhere around the
Mhm.
2342 mark, and the support lies at 2320. So for both those reasons, I think that just from a head and shoulders pattern formation, and also because of the presence of this level here at 2320, we might see an immediate pullback. Last, we had the geopolitical tensions, as you mentioned. I think this is going to create a huge gap up in the market. So when markets resume back on Monday, we're going to see a huge bolt up. Maybe about we start off itself around 2360 levels. It could be the way markets go, and the markets will kind of behave accordingly as the news progresses and as our new indicators come. Just as an update, the probability of a rate cut in June has dropped to 27% as of today. This is the least it has been for, I think, the last 3 months, and this comes on the back of the hot US CPI inflation data. It is surprising that markets are not even reacting to any positive economic data at all. In terms of events that we have for next week, we have some Chinese indicators over here. We have house price index, growth rate. These will be keenly watched. But broadly, there are no key events that are being, there are key data points that are being releasing. We do have some speeches from Fed officials that are going to be in tune. Lastly, Sunil, I think there's been a lot of speculation about where is the buying in gold really coming from. Is it central banks? Is it China? Has it been India? Is it some other source? We came across an interesting article which kind of also speculated in a certain sense about where the massive gold buying and the massive price action as a result has been coming from. So can you just provide a general commentary on what that article said? I'll probably put the link in the description as well, but just a general
Sure.
commentary on what that article
Yeah.
said. Yeah.
I think it's an interesting time because clearly this $300-400 move up has taken the traditional market by surprise. The usual places we will find demand is, in terms of China or India, the demand hasn't been that great. Even in the demand in the West has been very less. The sales have been very less of coins and bars, investment coins and bars. If you look at ETFs, ETF levels are actually this week are the same level as they were at the end of Feb. So there's not been an increase in ETF levels either. And if you look at physical stock holdings in London, that hasn't changed. If you look at most of the traditional uh, markets like futures, etc., there's no really indication of comics buying or anything like that. So a lot of the people have been really speculating, saying, where is this coming from? Is it central banks? But it's unlikely because a lot of buying has to take place for this kind of move up, and so it's unlikely any one central bank would be doing that. So this article actually talks about one potential area, which is options. And they're talking about a lot of call buying options that are taking place. And so what it seems to be happening is that people on the who are selling the options are hedging themselves through delta hedging, and that's taking the spot price higher. So that's where I think are possible. It's a possible link, but again, it's there's nothing clear. There's really nothing clear where this buying is coming from.
Thanks so much for sharing your insights and giving us a little bit of a summary of what where the speculation is really coming from. Let's see how the markets play out this week. Soon we may probably be in for another $100 run up. Who knows? But yeah, till then, thank you so much and goodbye.